AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 151. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Good morning, AJ. How you doing?
I'm good. How are you, Sip?
I'm doing good. Episode 151. I feel like it's a worthy one because how long have we gone without getting a rate cut? And we got a rate cut of 50 basis points this week, and that's like the big storyline. What are you seeing? How is that affecting you? Are you surprised by the 50 basis point move?
I mean, I was siding with bankers, and bankers were thinking it was going to be more measured at a quarter point basis cut, 25 basis points. But you know what? 50 basis points, as we were watching Monday and Tuesday and ultimately Wednesday roll in, we absolutely saw that the market had priced in this 50 basis point drop. So when it came, I wasn't that surprised.
Yeah, and I actually ended up catching some of the afterwards commentary, right?
Sure.
And it seemed as if the journalists kept pressing the Fed chairman to explain why 50, right? Like they almost wanted him to say, oh, we must be behind, that's why you have to go more than 50. And he kept reiterating, hey, the economy is good, growth is good, although there's this question of employment still looming here or there. Were you able to catch any of that commentary?
Oh, absolutely. And I think it frustrated investors to no end that he kept sticking with the, storyline that everything's fine, everything's strong, but yet why a 50 point basis drop? But you know what? The market had priced it in. And interestingly enough, I watched as some of the big money investors actually, once the news had been released, I watched as big money investors then sold off what they had built up for the prior week. The market had moved up, totally pricing in that 50 basis point drop, and then right when it was released, I watched those big money investors take their money right back out.
And so maybe let's pull up the S&P and just see what the reaction was, because it was good. I mean, the market was pretty much up all day yesterday at these high levels, and I mean that's optimism. Although I guess we were surprised by the 50 basis point, and everyone's starting to look at the next thing that's going to affect the market.
Yeah, absolutely. Well, let's take a look right here at the chart. So this is today, right? This was yesterday, and then this was Wednesday when the 50-point basis drop happened. Let me turn on my magic marker here, but as I'm waiting for my magic marker to load, the key here, I think we have to go intraday. We have to look at what was actually happening during the day. So I'm going to change it from looking at daily bars to let's look at 15-minute bars.
Because it's kind of weird if when the rally happened, right? Because it didn't happen during market hour. It pretty much happened all after hours.
Absolutely. That's key, Sip. And I've been struggling with this, right? And I think I'm coming to my conclusion after seeing today's price action, although I may be curious what happens into next week, right? So let's see if I can do some drawings here. The first thing is this was right as the Fed. Remember, the Fed comes out at 2:00 and they release their information. I'm looking for my magic marker. They release their rate cut, rate drop, and this was interesting because there was this buildup. There was this buildup up to Wednesday, and like I said, I saw the big money investors kind of take their dollars out. I just got my magic marker, so I'm going to go ahead and take it over. So I watched my big investors start selling and making all those gains. So I think, what big investors like to do is they like to be the leader to get small investors to kind of, based on, fear of missing out or whatever, when big investors, slowly start to put money in, little investors will like to ride on their coattails, right? And so I think that big investors were, feeding this 50-point basis drop all last week and into this week. And I think little guys followed in on that. And then I watched as those big guys took all the little guys' money, basically, right? And then I watched this interesting, I call it pump and dump type strategy. And it's not pump and dump, like penny stock traders do. But what I watched is after hours, those big money investors really then started to buy, right? And I almost think that they knew what they were doing by creating that after hours bump, especially after a huge news event. Even though they took a whole bunch of little guys' money for the last 2 hours of that trading session, they turned around and started to pump things up so that when it opened on Thursday, there was this massive move and all the little guys jumped in during amateur hour. Amateur hour is the first hour of trading, and during the morning session into the afternoon session, when I watch these same guys come in the afternoon, late afternoon and professional hour and start selling off again. So I almost feel like the, you know, no matter what would have happened during the Fed, news conference and Fed policy adjustment on Wednesday, our big money and traders looked at this as an opportunity to make some money off of the little guys. And they totally did twice. And now I think we're kind of really seeing what is the result of, this Fed move. You're starting to see now that all the games, this is like a cat and mouse game. And I think that, I wouldn't be surprised if we got into the tens of billions of dollars that changed hands during the end of Wednesday and yesterday. And it did pump us up to all-time highs up here. But now I think that we're starting to see what the actual response is to the Fed after all the games are done being played.
Yeah, I saw the Dow hit an all-time high. That was a news headline for the week. If you scroll back or go out a little bit on the timeline, we are at these all-time highs, and so the other thing that some of the journalists kept bringing up in the question and answer session was a soft landing, and so if we are in quote unquote a soft landing, I mean, what do we need to do to continue to move up in all-time highs, right? Like, it almost seems as if soft landing means we'll hang out at these highs for a while, until we get scared again by, something that's going to pull the market back.
Exactly. And I'm looking at my retracement analysis here with my little rulers. And, we've got this interesting pattern appearing, and the data is only as good as if the data was created organically. I don't know if that makes sense for some of our viewers, but as I just mentioned, I'm skeptical about the price action yesterday and on Wednesday. I feel like this was our big money investors kind of playing cat and mouse, taking advantage of our retail investors and fear of missing out and, basically running around the room. And whenever, some of the little investors' pockets were jingling, the big money investors would take some of that money, right? Kind of like, follow me if you can, and I'll get you each time you take a curve. So I'm so skeptical of the price action, but yet that price action, as you were mentioning, pushed us into my green zone. And my green zone followed by my magenta zone. So when I'm on an expansion move, expansion means expanding, getting past, going past the last high from the previous move. If I get into my green zone, that means that I'm actually starting to think about an uptrend. But my question is if yesterday's price action was not organic, but rather this cat and mouse game, should we buy into that, story that we're about to be in an uptrend, or is this more sideways chop? And that's where I am going into today and going into the beginning of next week. Was this a false price action bar, one that we shouldn't be using it, in our retracement analysis, or was this legit? And we really, it won't materialize for us until we get a few more bars till this is in the rear view mirror.
I had something there.
I hate it when that happens.
So this is what I was going to say is, so where's the risk, right? Is the risk going to the upside, or is the risk to the downside? And if it is to the downside, it sounds like this is a great setup for some of the premium strategies that you utilize in the program.
Yeah. I mean, basically where we're at and where people need to basically hedge their trades, right? And do some of our strategies that we've talked about is we're at this moment of truth, because this pattern can translate in all the ways. It needs to materialize for us, but this could totally turn into something that continues to push to the upside. It could definitely continue going sideways. And for our reversal traders, we could definitely drop down. I don't think there's any risk anywhere. I think that what we need to do is we need to protect ourselves in our positions, because it's just unknown. If I was a betting man, I would actually bet the following. Number one, that we don't have any risk to the downside, right? I think that there's going to be a lot of folks making sure that we pretty much don't go below this 5,200 zone, right? On the S&P 500. I think that there's a lot of importance of staying above that, at least staying above in the 5,000s. So I think that's number one thing that we could probably bank on. I think the probability of going down lower than 5,000 is pretty much off the table. But I also think getting above this 5,700 mark again, I think maybe that's not going to happen either. My probabilities of that are a little higher than going low, but not much. I think that, again, I'm going to still bet on the fact that we're in some sideways chop, and we're going to stay in between this 5,000 to 5,700, even maybe 5,200 to 5,700 zone, in that 500 points for the foreseeable future.
And we did get some other economic news this week. Some pretty solid retail sales, industrial production, housing starts, existing home sales. I guess the rate cut is good for the housing market, which has probably been needing some sort of relief for quite some time now.
I mean, I think that we're going to see, for August, we saw existing home sales. They were reported here on Thursday. We saw existing home sales shrink a little bit, which we expect. Kids are starting back into school. People are settling in. Late summer is not usually the best time to be buying houses. So we saw a little bit of a drop. But I think, with rates already starting to drop, they were dropping even before the Fed rate drop. You might see a little bit of picking up of houses, or refinancing. I think will get kind of valuable. Over here on Wednesday, we did see unexpected increase in both starts of new homes, the construction of new homes, and permits to build new homes. So, I actually think, there's been a lot of talk about fiscal policy supporting new home building and new home buying, right? I think that is the market and the people kind of reading the tea leaves, that there might be some fiscal policy, no matter who wins the election in November, that supports, creating new houses. So I think the builders are already jumping on the ball on that one. And yeah, retail sales were pretty good, especially car sales. I mean, we saw some other type of sales that were not cars kind of drop. So I expect, when we get to the holidays or even some of these, prime days, that we're going to see some really good sales. So if you've got some, you've been holding off on doing some of those purchases, this season might be when you're going to get your best deals. And then industrial production, interestingly enough, we've been hearing about all the manufacturing labor jobs dropping. Well, industrial production surprised everybody and showed an increase in August despite letting go of people. And can I just drill into this a second?
Hey,
I'm going to do it.
That's why we're digging into it.
This is just something interesting. I like to pay attention to this cap utilization rate. And, I've been watching this number for over 25 years, and I've watched this go up from the 60s. Like when I first started watching it was like 67%. And, 25 years later, we're 10% higher. That means that, in our manufacturing world here in the States, that we're learning how to build things with less human hands, right? The capacity utilization rate is how much do you get out of every unit of labor. And so what I'm kind of, just my mind is working here. When you're losing manufacturing jobs, but your industrial production is going up and your cap utilization rate is going up, what that tells me is you don't need as many, hands on the manufacturing line to make the same amount of goods, right? A lot of robots, a lot of AI entering into the manufacturing world.
Yeah, it makes the argument or the question of the employment sector very interesting, because it does seem that if we get more, like there's going to be more of a shift now from the super high inflation to, well, what's going on in employment? Because I know the chairman, the Fed chairman, kept reiterating that their policy is employment inflation. So that, I mean, I'm pretty sure that that's something everyone's going to be keeping an eye on the next couple of weeks as those employment reports come out. And then it looks as if we're taking bets on the next rate cut.
Yep. Already thinking about the first week of November. So we're currently at this, 4 3/4 to 5% zone. So right now, the majority of investors think that there's going to be a 1/4 point rate drop in November. Now, this could change, but it's 61 to 39. These people think that there's going to be a 1/2 point rate drop in November. So we'll watch these two graphs and see if the same thing didn't happen like it happened for this September rate, decision. We watched as this number grew as we got closer and this number dropped. So we're going to watch that again, see if that happens or if we stay with just a 1/4 point. And I always like to say what's going to happen by the end of the year. When I look at what's going to happen by the end of the year, this is, if you look at where we are right now, again, we're at this 4.75 to 500. They're talking about by the end of the year, most investors feel like we're going to be 0.75% down from where we are right now. So that means that we're either going to get a 1/2 point rate drop in November or a 1/2 point rate drop in December, because you can't, have 2 1/4 point rate hikes. 2 1/4 points doesn't equal 3/4 points, right? So, that's interesting that they still have their, they're still pricing in 0.75 point for the year, but for November, just a 1/4 point. So they almost feel like the Fed's going to slow down and then speed up again or something like that. But it's a constantly changing story.
Yeah, and really the first chapter of that is we actually lowered rates this week. We finally brought them down, and we're moving in the opposite direction. and we're going to, and if we like take a larger look at where rates have been, I think we as consumers, we got to get used to the 4%. Like we're not going back to the zeros and the ones anytime soon. And that was definitely, like a period of rejoice, but we got to get used to it being like 4 to 5 being like the regular, like it used to be throughout history.
I got to point one more thing out. The Fed did some easing in their whole, movement of tightening. They did a little bit of easing last week. So that's an interesting move, right?
Yeah, well, probably correlates with, we're going to drop rates. So
Yeah.
we should pump the brakes on this stuff too.
I watch them do easing about every 6 weeks, as you can notice, and then they get back to tightening.
Well, it looks like the markets are still selling off. We do have some good stuff left in the show. We're going to go through your pick of the week. We've got our speed round. Do want to remind everybody we are streaming live. We've got some time today, so if you have any tickers that you want AJ to run through, feel free to throw it into the chat. Otherwise, I just pulled up AJ's daily workshop. If you're new to the channel, new to the show, new to options trading, this is a great place to get started with learning how to use premium in your portfolio, how to use premium selling as a strategy, as an investment strategy. So head on over there. He's got 4 shortcuts to growing your account into a 7-figure income, almost like a monthly paycheck. Very good stuff in there. Head on over there. We're going to take a break. We'll be back in a few seconds. We're going to talk about options expiration because it's today. We'll kind of dig into some myths there, get some answers. Then we'll get into AJ's pick of the week and our speed round. So sit tight, folks. We'll be back in a jiffy.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. September 20th, the 3rd Friday of the month, right? Am I correct? That is the monthly rollover options.
It's payday,
right?
Payday.
And so as a premium seller, right, essentially the weeks prior, you've been putting out your contracts, you've been putting out selling some options, and those contracts have an end date, which is today at market close. And so all the income or premium that you acquired is now put into the bank account. Is that a fair assumption?
Yeah. Listen, folks, have you ever gone and had somebody sell you one of those big baskets of coupons? It's usually like a big book. They're usually trying to make some dollars, right? They sell you this big book of coupons that all expire on a certain date. And you pay like $10 for like $100 worth of coupons. Well, they're actually betting on the idea that you won't use very many, if at all, any of those coupons, and they'll get to keep that money, right? And that the vendors won't need to have to pay out. And so that's exactly the whole strategy summed up in one analogy of what we're doing here. And the scoop is our coupons all expire on the 3rd Fridays of the months. If you're using weekly options, they expire every Friday, but the majority of us are still using monthly options. And you can see I pulled up, anybody can Google, you just Google options expiration calendar, and you'll get the OIC. This is the big kind of governing body behind the options trading, right? The Options Industry Council, the OIC, and they publish this calendar, and it shows you, as I look at my Adobe Acrobat, this is a PDF file, so, it doesn't hurt. And they have these calendars, by the way, for every year. You can look at past ones and you can look at new ones. We just had this September 20. It's expiring right now. Next one is October 18. The next one is November 15, and the final one for the year is December 20. What's nice is all those coupons expire, and if they're not used, well, then you get to keep that money. And if they are used, you usually get to have, you get cashed out at a profit. So it's a win-win situation. And that's really what we're doing by selling premium, and what the significance of the third Friday of the month means. The third Friday of the month is just when these options expire.
All right. Well, that's, a quick breakdown on why it's important. And that's why the third Friday of the month is when we get the most joyful version of AJ, because all of those coupons have expired. He's got a big smile on his
We
face.
realize our gains.
He's taking the wife out to dinner in the fancy new EV, riding around town.
Yeah.
Happiest guy around.
Yeah.
All right. Well, we could keep that nice and short, because we do have a couple questions from some of the viewers that I think are worthy of looking into. Here is Mike. So AJ, your outlook for next year, when most of your read point is, I'm not sure. Basically, what are you looking forward to next year with regards to the presidential race? Is that going to have an effect? Because I keep hearing that if Kamala wins and the Democrats sweep, the market's going down. And then if Trump and the Republican wins, that's the opposite.
I don't put much credibility into, it's nice, this kind of buildup and all of that. But what the market's like. So if you think about these markets, you can think about a sports game, whatever your favorite sports game is. And I think you all realize that the real winners of any sports game are the ones that take the rules, right, and play right to the edge of the rules. Like if you're watching football or soccer, what you notice is that the players that can go right up along the edge without going out of bounds, but they play right up along the edge and then go and get the goal, those are the ones that make, the probability of the highest number of goals. They play right to the edge of the rules. So the scoop is, the first year of a new presidential election, you don't have to worry about this whole, re-electing a president and the divisiveness between the reds and the blues and the blacks and the whites and all these different, groups. Instead, you're kind of like, well, we're in it to win it here. And what happens is the rules get set and get stabilized. There's no more questions about what's going to happen with the rules. Are the rules going to change, or you've got a stable list of rules? My vision has always been that if the rules don't change, then the players can get really good at playing to the edge. It's when all of a sudden, it's not that the players running up the side of the field are doing bad. It's when all of a sudden the sidelines change in 10 feet and the person who was playing like, their best game ever is all of a sudden out of bounds. So I think what happens is not necessarily who wins, but it's more about stability. It's about, hey, we know what's about to happen. Now we can adjust our long-term plays, right? When you think about the markets and the companies that are trading on the markets, they do better when things don't change, right? They actually do better when there's not any sort of rules. So if they know what's coming, just like, we're not going to see any mortgage rate, significant mortgage rate drops because of this 50 basis point drop in the Fed, because everybody was already expecting the rule change, right? It was already priced in, and the mortgage companies have been dropping rates for the last 4 months, expecting these upcoming drops. So you're not going to see much significant movement because it's already been priced in. So it's really a matter of the stability that's going to come. So I think what we're going to see is stability, and from that stability, just growth across the board. I don't know if we're going to see growth in asset evaluations, meaning I don't know if we're going to see the market go higher, but I think that we're going to see the companies that trade in the markets, at least for 2025, 2026, get more robust. Instead of doing stock buybacks and some of the like accounting games to make their price go up, I think we're going to see companies kind of buckle down and become more productive, right? I think we're going to see companies buckle down and do the more traditional moves to reinforce and stabilize their businesses. I think 2025 may be, at least for the first half, sideways choppy, but I actually am, no matter who wins the election for 2026 and 2027, I think that we're going to have a pretty solid, uptrending market. And the only caveat I have is, should another pandemic come, because I think that we're generating these viruses nonstop, and that it's not a matter of if, but when the next, world stopping pandemic comes. But assuming none of that happens and there's no transient external stochastic shocks, I think we're going to see a pause where everybody just gets stronger. They go back to the gym and they basically train the fundamentals for at least the beginning, if not all of 2025. And then I think we're going to be on a good footing to see some growth moving past that.
I like that, going back to the fundamentals and the idea of stability, keeping
That's
the
what
market.
the market likes.
Yeah, and then I think of the Republican presidential candidates, Donald Trump, and then the opposite word of stability comes to mind, and so it's a very interesting next couple of weeks that we're in for.
Yeah.
And
we'll see shocks, Sip. We'll see shocks in the market, but I have a feeling they're going to be short-lived for sure. I really don't think, as much as people put emphasis on, our president and everything, and they do set a tone, but when it comes to fiscal policy, you've got a huge Congress, which is for the most part, dysfunctional. And so, I think it's going to pass just like any news headline passes. And it's the stability that it's going to bring, that we don't have to go through this cycle for another, 4 years.
And some industries will benefit one way or the other. I think that's just natural. So we'll keep an eye on things. I did see that Trump this week was talking about capping credit card interest rates at 10%.
I mean, I think we're at the point, and I've also been seeing all this stuff about unrealized capital gains, which was one of the things that Kamala was talking about. I think it's at that point where they're saying whatever they have to say to get elected. But, first of all, unrealized capital gains, I laugh when people are saying that's a big deal, because if you look closely, it's only going to affect people that have $100 million or more. I wish I had that problem, right? And if you have $100 million or more, you're going to be able to afford special asset protection attorneys who are going to know how to use entities and hide the money anyway. So it's not even a talking point for them. But it's not going to affect, I might be just under a fifth of the way there, but I'm already 51. I don't see myself ever making it to the $100 million mark. And it's really not something any of us have to worry about. The point is they're saying whatever they have to say to get elected. So good on them. But for me, I'm just looking at the markets. And like we said, the markets like stability. It's funny. The markets really like gridlock, right? Because gridlock means that rules aren't going to change. And so that's really what makes the markets grow, is when rules don't change and they can play to the edge of the game.
And you and the team at Trading Trainer are utilizing the entire field, all of the rules, all of the tools that we have that we as investors have at our disposal. And that's why we've got the show, and we've got a good example that we could dig into what you're thinking and how you're utilizing this strategy. your pick of the week this week is an industry that has been on the up and up for a few weeks, and that's the gold industry. But specifically, you have a play or an opportunity in Eldorado Gold, ticker symbol EGO. What do you see in there?
Well, and let me agree with you on that one point. So gold is just going up and up and up, hitting all-time highs, right? I've been looking at Bitcoin, but let me go ahead and take a look at the gold here in front of everybody. You know, it's at an all-time high. Let's click on this. 2,640 is where we currently are trading basically on gold. So, you know, it keeps going higher and higher, but Eldorado Gold Corp is one of those mining companies, and that's a little bit different. Although, you know, they've been going up. If I go back in time about a year, you can see just like with the price of gold, they're going up as well. But I keep seeing this slight uptrend here, but I also see the sideways chop. And I think we can trade that in the short term. Now, ideally, I would like to actually get in on a long position. So that means my covering position would be either buying shares of this stock or buying, you know, back month deep in the money call options. And so ultimately, I think that's what I'd like to do. In other words, I'd like to wait for this to pull back, and I'd like to, at the next bottom reversal, get into that. But I see a short-term trade where we could do some shorting. And the reason why I pointed this out today is because we did get a signal on Wednesday that on Thursday we should think about shorting, and on Friday we should think about shorting. And the truth is that on Thursday and even today, we're not getting the follow through, which tells me that we still have opportunities coming up in the next week to see follow through. And in other words, you haven't missed your opportunity to short some Eldorado Gold. And I would short this thing, and then around the $16 mark, maybe even lower, I would look for selling some premium. And at the same time, I would double down and I would buy some of that stock. So I'd be in this position from both sides, right? But I guess for the immediate, I'm looking for follow through on my shorting signal in order to short some of this ticker. There's enough liquidity in the back end. If I didn't want to short Eldorado Gold, maybe I'm not into shorting. Or maybe I don't have a margin account, which allows me to short. I'm in a cash account. I could then instead get the same effect by buying something like the Eldorado Gold April 2025 $24 put. That put has enough. It acts like the stock. And this is one of the cool things about options trading. We can create all of these substitute positions. This is a stock replacement strategy. So instead of shorting Eldorado Gold, right? Because shorting basically means if the stock goes down, you make money. If I buy this put option I just mentioned, which is the Eldorado Gold April 2025 $24 put, if I buy that, I will also make money if it goes down, and I'll probably make money close to the same rate as if I shorted Eldorado Gold, and I'll get to buy that stock. So I really like this idea, but again, I'm thinking short duration here. I'm thinking probably, I could see even when I sell premium, selling premium that's in the money, assuming that I would get exercised, because my real play here is to go long. So my real play would be to look for the next bottom reversal and buy some Eldorado Gold. So a short-term play and the longer-term play laid out for you guys. Look at Eldorado Gold.
Yeah, and I see this name all the time when people want to get into gold but not actually be in the futures contracts. This is a great kind of substitute to leverage any of that momentum. So that's AJ's pick of the week, Eldorado Gold, ticker symbol EGO. All right, we've got a few in the speed round, AJ. If we want to, we got about 20 minutes here to run through those, and then we got a couple user names. So, plenty on the docket to get your feedback and to utilize your trading tool. Let me go ahead and pull the link to that up as well. Anybody watching, viewing for the first time, you see the red and green dots. That's AJ's free trading indicator. We don't have a fancy name for it, but it's on every single chart and it gets the job done. So if you want access to that, head on over to the link. There's some other free tools in there, but the link is in the scroll. All right, speed round. Let's start on my neck of the woods, per se. Ronald from San Diego, California wants to know what you're seeing in United Natural Foods, ticker symbol UNFI.
Okay. I like United Natural Foods as a potential premium play. Hey, check it out. So it looks like United Natural Foods kind of faked us out a little bit here, gave us a top signal, and then gave us a bottom signal. So I want to see that play out, Ronald. I want to see another top signal formed in this range. If I don't see that top signal form in that range, I almost want to think that United Natural Foods is starting to do an uptrending move. And so I could try to trade that uptrend, or I could wait until it's sideways channeling again. And the reason why I say you can wait that it might do some sideways channeling again is if I look at kind of the bigger history, this is looking at the last 2 years. United Natural Food likes to trade sideways, and then it has these like 1 month or 2 month moves, and then it's sideways, 1 month or 2 month move, and then sideways, and then 1 month or 2 month move, and then sideways. It's been sideways since May. So I want to first find out, let me bring us back to, more current price action. I want to find out if this little, last 2 weeks of shenanigans right here is just what I just called it, shenanigans, or if indeed we have some sort of swing trade play going on. So basically, I think that I would want to see some sort of reversal back down, another magenta arrow on our free indicator, somewhere below 17 bucks. We're already at 16.50. So I'd like to see some sort of reversal down before we get to 17 bucks. And if we do, then I'm going to trade this just like I've been trading it since May as a premium trade. Your move there would be either short this thing, or if there's a back month option to substitute in a back month put option, do that. If instead we continue to keep moving above 17, the truth is that this is a classic swing trade pattern where you're trending up and then you get a pullback and then you swing back up. If we get above 17 and we haven't seen a reversal yet, you may want to jump in on some sort of swing trade. That means buying some of this stock, or if you wanted to, you could play our, use our cash secured puts and see if you can't, buy I should say sell some cash secured puts in order to buy the stock, and if not, get paid for that. So I could see a couple of different strategies here. Really what you're waiting for now is, will I get a top signal before 17? Great pick, great set of options here. We just got to let it mature a little bit.
Yeah, great price point as well. So
yeah,
thanks for bringing that one up, Ronald. Okay, our second name, a name that everyone should be familiar with. Laura in Atlanta, Georgia wants to know, is there a play in AT&T? Ticker symbol T.
We featured AT&T as a play back in, I'd have to look back at our archives, but I think it was back in April, SIP. And we were looking at the sideways chop, and AT&T, all of my traders just kept in the trade. And I think that they were just now looking for a exit point. They all bought at like $16, and they've been exiting around $22, $21, which is great. That's like, in just a 3 or 4 months, you get this huge. And if you leveraged that, we also talked back then about leveraging an option. If you leveraged an option, there was a possibility that you more than doubled your money in just the last couple of months. So hooray for that. But I guess what you're asking for is, what do we do now? Well, again, I hate to say that we need to wait to let this mature, but you've got this beautiful trend, right? And now you're going to a oversold condition. The question is this setting up to be another swing trade? So what I usually do, and this might be something that you guys want to jot down, for a nice swing trade, setup, use an overbought, oversold indicator. One of my favorite ones is the Williams %R, right? Williams, there it is, Williams %R. So add that to your charts. And what you're looking for is for the Williams %R to get really oversold. You can see that it's right now at this 59 mark. You really want it to get down below 90, right? This is an inverse. It goes from 0 to a negative 100. So you want it to go not only oversold, but extremely oversold. Like over here back in July, the Williams %R went to a negative 94. Over here, it didn't quite make it. It was at a negative 86. Back here on May 29th, it was at a negative 98. Over here in April, gosh, it went all the way down to a negative 100. So you really want to see this go all the way down below a negative 90. I know that they put these sample thresholds at a negative 20 and a negative 80. I sometimes go in there and change them to a negative 10 and a negative 90 because that's where the magic really happens. So you can see I just moved it, and you want to know we want to see this go that far down. And that's just part one. Part two, I want to see a moving average crossing. And that moving average crossing is the 1 and the 7. So you could even use our free indicator and kind of rejigger it a little bit. Here's our moving average crossing. And for the broad market analysis that we do, we use a 3 and a 5. Switch that up for a 1 and a 7. And switch it up from being exponential to simple. And only after you see the Williams %R go below 90 will we look for that light blue indicator. And if we get that light blue indicator, jump on that trade. Buy some AT&T. You're going to go for a nice run. Otherwise, we might be setting ourselves up for a reversal. And so look for the reversal type strategies, and you might be able to play the other direction. So again, got to let this mature, got to watch our indicators. But if the Williams %R goes low, and then we get that 1 and 7 crossing, in this case, we're going to get that indicator showing. That's a great swing trade, potentially a lot of money on the table for you.
Yeah, AT&T, I mean, this has been a stock for so long. I'm just like, it's one that probably sits in a lot of portfolios, and that premium selling strategy is perfect for long-term boring movers. Although AT&T seems to be, on the up and up, at least this year to date. So thank you for that, Laura. All right, our third and final name. This is Carlos in Cleveland, Ohio. I'm interested where this is going. He wants your take on Container Store, ticker symbol TCS, which, I would assume is a great predictor of the economy, right? If people are buying containers, the economy's good. If they're not, the economy's bad. I don't know.
I have my own personal story about this because my wife loves this store, and I go in there and I think it's just a whole bunch of overpriced boxes. But the Container Store has been having trouble for ever since it went public. It's a very niche market. It's for organizers. And for the longest time, it was on death's door. And then there was some TV show that came on And I don't ask me to tell you the name of it. My wife watched it religiously, so I would walk past her in the TV room and see this on. And it was about these organizers who would go into these celebrities' houses and organize a garage or organize a kitchen or something like that. And they made popular the Container Store again. So the Container Store, it was during the pandemic. It was about 2 or 3 years ago that this show was very popular. So the Container Store came out of the red, was in the black, thanks to this free advertising on this TV show. Well, the Container Store has since, especially since people are back at work and they're not they're not sitting at home staring at mess, so they're not worried about organizing it. It's kind of been going downhill again, and I want you to pay attention, Carlos. I want you to pay attention to what happened a few weeks ago. It was a reverse split 15-1. So if you think about it, with the Container Store trading at $10 now, something like that, $10 to $15, this thing was trading under $1. It was not even the Home Edit. There you go. Trish is watching us. Trish is one of our favorite clients, by the way. She's absolutely amazeballs. Trish just commented that it's called the Home Edit. The Container Store, we actually, my wife and I were just in there because my wife thinks that we need one of these high-end organizing closet things that costs 20 grand. And she's not getting it. And well, I mean, unless she wants to pay for it. The scoop is boy, that sounded bad. I'm like, we can go to Home Depot and buy some wire shelves.
Your wife did get on that NVIDIA run, right? So
she absolutely did
put those profits to use.
You're absolutely right. So this is a case where the husband should just shut up. So the Container Store, it was trading under $1. It was considered a penny stock, and they were actually getting notices of being delisted. So that's when the exchange is like, hey, you're no longer viable. You really probably need to get out of being public. So it looks like the powers that be did a reverse split just a couple weeks ago, brought the stock price up. What that means is the Container Store is looking to be purchased, right? The Container Store is looking to be either purchased by private investors and have it go private and restructured and something like that, or they get purchased by a bigger name and somehow get reorganized in with that bigger name. But the Container Store is basically on death's door, even though it looks like a good pattern. So, you could play a speculative play. You could try to get into the Container Store and hope that when something happens, they cash out the investors. A lot of times when this happens, the investors get the short end of the stick. So I'd be very careful. But yeah, it's a good study about, how to notice some of this stuff when you get like a reverse split like this. And they're basically, when you see a reverse split and the company wasn't being threatened of being delisted, or it wasn't in penny stock territory, that's a different story. But a 15-1 reverse split on a company that was in penny stock territory, that was getting letters after letters from the exchanges that they should be delisted, it totally reeks of, hey, we want to be acquired, and they're trying to make themselves look good. So be careful about anything having to do with this stock right now. If you want to go shop at the store, more power to you, but be careful about any investments on the Container Store.
I just looked at some of their fundamentals, and I'm shocked to see that their market cap is only 49 million.
Mm-hmm.
There's a lot of potential buyers to just buy up all the stock.
I wouldn't be surprised if their inventory, is much more than that, because, you go in the store, you just walk into one of those stores, Sip, you'll be so surprised at how much a plastic box costs.
Well, that's why I started the episode with it. I think it tells you how the economy is doing, right? I mean, if people have the the funds to overspend on the
Good point.
overpriced containers. And there's actually a very nice container store in the Beverly Hills Mall, which is like probably the most fanciest place in the world, and it's really nice in there. But as you go and you look at everything, it is, maybe that one location crushes it and it's just not sustainable in, all parts of the country. But
All economies.
definitely good to look at that reverse split before taking in any investments. I think there's some nice logic to maybe avoiding some of those, because there could be some big players involved and, could sway one way or the other just from a business perspective. So
Absolutely.
hopefully that was Carol. Hopefully that was helpful, Carol. If you don't see an investment opportunity, hopefully a container grabs your attention and it brings some satisfaction that way. All right, AJ.
Look for deals.
Yeah, well, for sure. And we'll be, like you mentioned earlier, we'll be getting some in the next couple of weeks as we head into the fourth quarter, the holiday season, and all that jazz. All right. Well, I looked at some of the tickers that were thrown out there, and they seemed all kind of a little too speculative for a lot of the strategies that you would be implementing. So yeah, heading into next week, we're going to be looking at this market top forming, potentially seeing what follow through we're going to be getting from this week's 50-point basis cut. And then what else do you have on your radar that you're going to be keeping an eye out on?
October expirations. The cycle starts all over again. So we're looking for those opportunities to not only sell call premium, but sell put premium. And we're also looking for, or not looking for, we're making sure that our positions are hedged. And when I say hedged, it means that they're automatically going to adjust if the market breaks out or breaks down. So I want to get these strategies. I know we just had expiration, and so I kind of want to accelerate, maybe not take the most ideal trade for October, but I want to get those hedges in place. I want to reset my protective options, and I want to get my new premium sold so that I'm safe until the third Friday of October for whatever the market wants to deal with us next. So next week's going to be kind of a busier week, just getting my portfolio, in a place where I can put it on cruise control.
And if anybody watching wants to follow along a little bit more in depth, get some more insights, we've got a nifty links page. I went ahead and threw the link to that in the chat. But show some love, hit that subscribe button on the YouTube, head on over to the TikTok, to the Instagram, hit the Facebook like, go watch the webinar, learn more about joining the Trading Trainer program, learn more about one-on-one coaching, download the free indicator suite. Lots of really good stuff. Last week's episode, we did unveil the options lookup tool, which is still being finalized. And
we're tweaking some of the data. There's so much data, Sip. Each one in a single day, you'd be so surprised, but there's 1,500,000 lines of data per day for all the options. I mean, the amount of options data is just so much. We're just processing. I've got all these. I'm surprised. I've got like all the Amazon web servers like totally working on my benefit. I can see why, people's talking about how AI is going to use a lot of electricity. Just to process one day of data, it takes like 17, 18 minutes. So we're processing this data, getting it in there so that we can have access to at least the last like 4 or 5 months of data.
And we're still accepting people on the wait list. So if you're a member, you're going to get access once it's ready. If you're not, leave a comment in the chat, throw your email in there, and we'll get you information on how to access that. But very exciting stuff. If you want to see more of the insides and the processes of how it actually works, go to episode 150 on the show. Scroll to, I don't know, about the halfway mark. That's where we unveil it. We also have a clip on the YouTube channel as well. So lots of good stuff. Heading into some juicy trading, investing times. So be sure to return next week for the episode. Show some love, hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. AJ, we appreciate your time and you taking, jumping on here, giving us some feedback, some insights.
Absolutely.
Hopefully everybody's going away with some great ideas. And yeah, that'll do it for us. Appreciate everybody. We'll catch you next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you